How to get no-doc business loans and lines of credit up to $250,000 and above, startup funding friendly, plus best business for many people to get into. And what is that all about? Before I get into any of this, welcome in. If it's your first time here, my name is Michael with Viral Funding Solutions. I've been a business funding expert, a business loan broker expert, as well as pre-underwriter slash underwriter, business analyst, growth strategist for many years. I know how to not only help you get funding at a very high level, I know how to identify fixed constraints, problems of businesses, grow them, expand them, customer acquisition costs, lifetime value, lifetime gross profit value, cost of goods sold, cost of sales, profitability, cash flow analysis. I do a lot, mathematically sound, systematically. I have a very math and system brain, very introverted, analytical, cerebral type. So not best with my words, not a wordsmith. I've learned the skills and I have multiple businesses and I'm very ethical in all that I do. What I want you to know before I move forward with any of this is as a person, I have your best interest at heart. I know my funding at a high level. I have a very high standard. I understand the problems. I've been through funding myself, so I get it. I do. If you're right now a startup or not, you're having trouble finding the right people, connection, service to get the best for what you're looking for, and many more reasons. You're just stumbling and you don't want to just be accepting of just putting your information out there. And if you already have and things haven't gone right in whatever capacity, now it ends today. And I'd like you to know that I know my funding, and in business, I understand how to grow businesses, identify problems, analyze a business internally, from the outside in, inside out. And as a person, you have somebody who has done a lot of personal growth and development as an entrepreneur, not just a business owner of multiple businesses, but an actual entrepreneur. And I'm so thankful and grateful for the people that are in my life right now that have given me opportunity. I've given them opportunity. And yourself, if that's you in the future. And I'm always grateful and thankful as a person, very loyal, I have a lot of integrity. Family, friends will say very humble, very nice and kind person, very trustworthy, reliable, accountable. I don't pressure anyone, very easygoing with things. I have things together, I have myself together, and a lot of these things. And what I'm looking for too is someone who is open-minded, gives feedback, and is patient enough, can work on these things. Not that you have to have them all or one of them. When you come to me, I just want you to know that I do things again at a level, at a high standard, where if you're coming to me, allow for feedback. Don't be that person who I don't hear back from when I send an email. It's not like we have to be on the phone. I don't do everything over the phone, just so you know this. I have a form too if you want to get in touch. I'll leave this down below in the description, and I'll also leave my link tree. So right here, I'll likely leave this as the first link, if not one of them. And here you can learn more about what I have to offer, what I do, and everything underneath after the first button, excuse me, is funding related. I usually have the first button as like if you want to start a business, what do I recommend? It's an online one, by the way. And if you want to see what I do, the first button you can click on right there and it'll take you over and you can learn more and how to get started there. So I also educate people on what I believe to be the better business to get into, which is an online one. And I'll show you how that's done, what I'm doing, how it works, and all of that. And so if you're looking for another opportunity, you're a startup right now, you're just not quite sure if you want to keep doing what you're doing, or you do know that, but you want something else where you have much more freedom of energy and time, lifestyle, and this kind of freedom, residual income, passive income, something much more consistent and stable while you can go do other things. I recommend checking that out with the first button. It's awesome stuff. And then underneath the first button, you have the business credit building free video series, net 30 type and 0% interest. I highly recommend checking that out. Business funding submission form, which is this you just saw. And then I also have one for real estate, which I will show you in a second. And when you click one of these two, you go to the form depending on your needs and where you're starting. Down here, you have real estate funding form. So if I click there, here's the form. You can go through it. And that's if you have a property address and you want to do more of a private real estate lending type of option, or what other options in the real estate space are there out there aside from like getting credit cards to use towards real estate and things like that. So my story, how it all started, if I have some time, I'll go over that at the end or maybe somewhere in between this. And then everything underneath this, you see there's more. So usually the first five, six or so buttons are best to begin with. And if you have anything else that you need help with, like credit repair help, I also do more merchant cash advance debt restructuring and other forms of debt relief. So on the credit, cash flow, collateral, liquidity, equity, real estate is in the mix. I've done quite a bit. So now back to this again. Just want you to know that I have your best interest at heart, and I'm not like everybody else out there in the funding space. And I got into it because I went through things and I see how many people have problems. They're being overpromised and underdelivered, not communicated correctly, the right information. People just want to bring you into an application so they can make money off of you. And when I come across people, I go, why don't you get help from the last person? Well, they're no longer there, or I don't want to work with them any longer, or I don't trust them. And then there are others who are just accepting of that. So you have to be very careful. And if you have a high standard and you want to work with somebody who has your best interest at heart, I'm here to help. And I don't do things all off of volume, just so you know this. I actually nowadays do less volume. And I just look at how I can make each one of you even worth more by seeing, okay, well, there's a lot of value I provided here. Here's funding you received, or not yet, but here's what I can help you with. And then what other things can I help you with? You needed payment processing, you needed a better cash flow financial management tool. And that's how it's better. And I'm open to new people. Just make sure you come in with this right expectation. And even if you don't have 100% right expectations, like, hey, I'm going to be open, I'm going to give feedback, even just sending a simple email to you and not responding, a text message and not responding. I'm not with all that. And I get it happens, part of anything and a lot of things, but I'm at a phase and a time in my life where I don't need to be dealing with that. And I don't think you need to be either. So commit to something. If you're going to commit, commit to me first, commit to what you're doing here on the business side in your business. You don't go halfway with it. And I'm going to help you 100% longer term. Okay. So now, when people want no doc business loans and lines of credit, most people think, well, what can I get from my bank? Well, what is the best banking relationship? And I'll get into a little bit of that as we go forward. Is there really true no doc business loans and lines of credit? Uh, in some ways they're out there, but they're truly usually not no doc, it's low doc. And I'll get into what services low doc is and why you hear no doc. When you get into no doc, you often think, okay, well, I don't need to supply financials. I don't need to supply bank statements, none of it. No proof of income, no verification of income, of revenue in the business, W-2, pay stubs, anything tax return related where they can check your income, or anything else related to P&L they won't ask for a line of credit. If I don't have that, I won't get approved, or it's not up to standard and the period that they're looking for. I get all that. I've been through things like this myself, and I've helped out many people. And so in this, when you speak no doc, well, what kind of assets do you have? What kind of asset management protection do you have? Do you have an LLC with that? Is there a trust? Is there a title? There's a lot of things to look at. And so oftentimes proof of credit, proof of income will be required. Certain services won't look at, well, how much cash flow, how much revenue, profitability does the business have? On average, how much gets deposited, how much liquid, how much free net cash flow, change in working capital do they really have? So it depends on the service you go to. When we do like credit cards, we do creative credit-based financing with multiple 0% interest business credit cards. And for a period of 6 to 12, if not 6 to 18 months, can you get up to 150, if not 250,000 to start with as a startup, newly established business and entrepreneur? Those work phenomenally for, excuse me. And even if you're not a startup, you can still go for those. It just depends on your needs. How much exact liquid were you looking for? You need to pay some extra bills in the next 3 months. Here's how you're going to get billed. You're invoicing, you're getting your invoice, everything, but you're still waiting for an outstanding payment of an extra 3,000 to 5,000 that you need a 0% interest period for, or this project won't be completed and I won't generate enough revenue, ROI. I won't even hit equilibrium until 6 months after. So 0% interest works well. And a lot of the times, proof of revenue, cash flow in the business is not required. That whole income verification is not required. Now, when you look at like lines of credit and you want a no doc, it's really hard to do that too. And a lot of banks are just not offering this. And there's a lot of strict guidelines, regulations, cap, and you have to look at what's going on in the economy right now. And there's still uncertainty, even when things are changing, as things are getting better, things that are proposed. You have to take everything at a great with a grain of salt and be cautious about these things. And so it looks at, well, asset, how many assets do you have? How much is already in the bank account starting? And a few other things to see, can you really get a no doc? And it truly just doesn't work out for the majority, and you're just not going to truly always get and see no doc business loans and lines of credit. So what does this say? Is be comfortable with accepting a personal guarantee, looking at your credit, even if looking at your credit was a way to say, let's get a no doc business loan or line of credit. Well, at the end of the day, you also want to look at your personal credit because you're the one who's guaranteeing it. Even if you weren't guaranteeing something, like looking at your credit, even on the business credit, shows how well you make your payments. Are you responsible? Do you have a past history of delinquency, collections, anything derogatory? There are a lot of these things that happen. So you are the borrower usually. First, the business is the borrower second. Okay. I just want to make sure you understand that. And if ever you have any questions, comments, concerns, down below in the comments, make sure you leave me a comment. I'll also leave my email in the description. But what I've shown you today with my link tree, the form, etc., that's where I would begin. Everything will be there. So now let's go underneath this and give you a few details and go over what then you can do. So you have Chase with their business line of credit. Now, this isn't all easy to get. My main banking relationship is Chase. I've been with them for many years. I have others out there, and they by far are the one that I recommend the most. They're just really user friendly, very flexible, as versatile as you can get. There are others out there too. You can say that about regional banks, and I can go deeper into those and what they offer and how they cater to people. And even those that are not so national and open, regional, more community based, and only offer within your state. That's where you're going to get a huge advantage too if you're not open to other banking relationships, which I recommend you have the A-tier banks at the top, like Chase, Bank of America, you can get a Wells Fargo, etc. And so with the Chase business line of credit, this requires bank statements. So if you're a startup, even if you're not a startup and you don't show the right type of depositing frequency, you don't have the right cash flow, cash coming in, cash going out, during what time, during what periods, there's plenty more. And I review financials myself, just so you know. I look at a lot of tax returns, personal, business for different entities. I look at credit reports. I know how to analyze a lot of this. Cash flow, profitability analysis, different formulas that I look for, debt service coverage ratio. There's plenty more that I look for. And I could spend a whole different time on a different video going over all of that. But I do go deeply into a lot of this, just so you know. So I'm not just the guy on the front end who's like, hey, let me just send you there. No, other times that may make sense, but for a lot of this, I love to review financials. It's just how my brain works. And if I don't do that throughout the day, I don't feel like I've done much. And so looking at your credit score, like anything you're going to hear throughout the rest of this video is your credit score is a huge indicating factor if you can borrow the money you're getting. And I've had people who come to me, well, the bank didn't approve me and I have a good business plan and I'm ready to grow and they just don't understand my needs and they may very well not understand how you plan to use these funds. Not all banks do. You might see something that is outdated for them, or they're just too old school and the credit facilities are. And so you have to understand that it's different for each business. And again, I've been around long enough to understand operations of many businesses, many restaurants, manufacturing, construction, online, offline businesses, healthcare, IT, and many more. And so they'll look for that and also your business revenue proof. So if you already had to cross one off, that won't work. This one, oh, one of them, oh, all three will work. But still, getting a no doc business line of credit just is not the case for the most part. And if you've been hearing that from many others, you have to be very careful. If those things appear, they appear shortly, or they're just very hard to get. And is your business standing on its own where it has so many employees, so much in the accounts, so much liquidation value? Asset value and protection, and just plenty more. I can get into that deeper, but I won't do that right now for this video. And so you also have the Wells Fargo side with their unsecured business loans. And like Chase, this will require your credit score and some revenue verification for approval. Now, verification of revenue for approval, months of bank statements, a few other things, depending on seasonality, depending on the time in business that you have, startup, even that won't work at that phase, trying to supply other type of supplemental information. You just have to understand that a lot of businesses fail. And so why would they put their neck out for you? I wouldn't. And I'm not saying this as a bad person. This is just tough love. And you're probably thinking, that's fine. It's okay. And that's a great way to think is, yes, I get it. Now, what's the next thing that I can do? Here you have Bank of America with their business credit lines. This requires at least 2 years of experience, more or less there, unless things change in business and some financials needed for approval. So similar to what you saw there at the end with some of the two before it. And that could require more than what you would see just bank statements, if so. And again, it can vary. Things may change. You might see things different. So that's what I want to give you with just at least three of them. There are plenty more out there that I can get into. So now, what can you do? Well, I recommend credit card stacking. This is where I can help you and with the team too, add 3 to 5 cards at once, apply for 3 to 5 cards at once to maximize your approvals up to 50, 50 to 150, 50 to 250,000. And that would be a better way to do this so you can have enough liquid cash flow for an introductory period of 0% APR for the first 6 to 8, 6 to 12, 6 to 18 months. And it's kind of shortened with a lot of credit card debt. What I'm seeing out there is the months have become lesser because a lot of credit card utilization has gone up, delinquencies, too much credit card debt still in this economy with a lot of people. And hopefully that goes down over time. And as you have much more liquid cash flow profit, you can pay down debt with your revenue of the business as you keep growing and there's more available funds to keep growing and to have more cash flow. So that 0% interest period for startups and even for non-startups is the way to go. Uh, and because again, you help your cash flow and you can even get much more immediate cash flow at 0%. You keep more, save more, you get to make more, and you get to make more too, even if your business isn't growing as much as it would want, or you want it to, or you just know it won't yet. You won't get to that point yet. But let's say you start generating revenue at that 0% interest period, it'll help you a lot. Now you have supplemental extra cash flow on the side, how you decide to use that, how you're reinvesting back into your business or other projects. And then you also have like DSCR. And if you're in real estate, you can look at that, and that would be another point of injection, another way to help. If you're going to be using 0% interest credit cards to help you along the way with that, on top of it, to have extra room for cash flow and just look at the rental income of the property. And I can get into short-term, long-term rentals, Airbnbs, vacation, and other types. And I'm not going to get into all that in this video, but if you do need help on that side too, again, I'll leave more information down below. So over here, some of the best business credit cards, 3 to 5 is best for startups, newly established businesses, non-startups, and plenty more. I recommend these, and it depends on the phase of time in business. Depends on, uh, I mean, time in business as in like, where are you now in terms of growth and things like that. This can apply to anybody who has minimal. You're just getting started in business. You're getting your LLC, and I recommend if you have a seasoned LLC with at least 2 years, a year plus helps, but 2 plus years, you're better off. And I have people come to me quite a bit and ask me, well, I've had this LLC sitting and it's been what I say dormant, hasn't been used. I wouldn't say it's a shelf corporation or shelf LLC or anything like that underneath S Corp or C Corp, etc. What I mean is you just haven't used it. But is it active? Is it inactive? That's the question. And like I told somebody recently, and I've told others in the past, is activate it. Like make sure if everything is in good standing, you're ready to go into this. And not saying that you needed an LLC directly all the time. If you can provide your EIN, verification, and things like that, voided check, uh, things like that, certification of formation within the state. Now we get into like LLC stuff and the identity of the business, but as a sole proprietor, that's a bit different. And so both ways, but I recommend you have that entity like LLC, S Corp, C Corp, etc. There's more to this that I can get into, but I think you get the idea. And having multiple cards. Now, I'm not going to get so much into strategy right now in this video to go into like, well, if I got approved for this, if I got approved for this, do you think I should use it this way? Or if you think, okay, we should use it this way because then you'll have extra funds to use it like this for the remaining completion of the project, which you have 25,000 left over. You have this much on this card, this much has been used. The period will end on this. You'll generate an ROI of this, not completely 75% of what you wanted. Maybe you'll get 50% of the way there. So use as much as you can. Total out on this card. Put at least 5,000 of this one to complete this build, and or you're using this for extra inventory you'll have on hold for the next 3 months, and it won't be liquidated fast enough. It will hold you over. You'll lose some on cash flow, not plenty of it, but you'll be fine, or you won't have a problem at all. You're going to get equipment. You need to purchase contracts. You're in a bid right now. You're project based. You need this for your residual income business model, your revenue model, cost of goods sold. Can your fixed and variable expenses really keep this up? For your marketing and advertising costs, what are you doing there? Your markup costs. What's your net free cash flow, EBITDA, SDE? How much do you plan? What's your evaluation and your valuation over time? And so there's much more that I can get into, and then business metrics, but this is not the video for that. And so over here, I recommend the Chase Inc. Business Preferred. I can get into many different cards with Chase, the Chase Inc. Unlimited, and all their cards, honestly, I would go for. The preferred one, though, for startups and you're just filling it out, that's not a bad one to start with, and you can get into that. The unlimited, when we're getting into 0%, when we're doing those types of cards, that's what I would recommend, especially as a startup. But here you get 100,000 points for sign up bonus, 3x points on top business expenses. And if you see things change, vary after watching this video, etc., you might see things change. Well, there you go. The Amex Blue Business Plus card, there's a 0% intro APR period for the first 12 months, and you will get 2x points on all spending. So there's a lot of purchasing power when you get that on all spending and categories, and sometimes other cards limit you, but that's not a bad thing. So you want to get a card too that you know you'll spend so much on this. You have materials and supplies, you want to maximize, you're getting front loaded 25, 50% of the material, or you're billing somebody upfront this much and you can collect the rest of the 75,000 later because you have a higher bid and you have a higher position project where you're going to earn a lot more revenue from it. So you can you can take the cushion on the upfront because on the back end you will get more. Otherwise, you're quickly invoicing, you're quickly expecting payments to come in, and that restricts your cash flow too. Other times, longer term projects can also restrict your cash flow if you don't have smaller projects or other projects that haven't been completed. So, yeah. Bank of America Blue, excuse me, Bank of America Business Advantage. Cash rewards. I wanted to say the Blue Business Plus. It's much easier to say that. This gives up to 3% cash back. And Bank of America is one that I can have at the top with Chase, Amex, American Express there, and then Bank of America. I could say other ones, US Bank and others out there, but Bank of America is a great one. And if you haven't filed for your LLC, your entity, who do I recommend? How do I recommend doing that? Many people would think, go to the IRS, do this. I'm not saying you shouldn't do those things. If you want to do that, what I recommend is a place like Busy, formerly known as Inkfile. And that's where I've done mine. And so I'll leave more information down below. And also in my link tree, like I said, if you want to make sure you have your business structured, right here, business credit building for video series, I'll show you a lot and I'll give you a document there that you can pick up on setting up your business correctly, business credit and Dun& Bradstreet and all this other stuff will be in there. And many people have used that, by the way, and it works well. So right here, you have the Capital One Spark Cash Plus card. High credit limits are available. And when you go Capital One, that's what's intriguing about them is they do usually approve for more higher limits than a lot of other cards. And they are understanding of the position people are in. And it's what they look at a lot on the personal side, like many of these do, and how they approve. Uh, but they are flexible in that regard. Now, what you should be careful of is getting too high of a credit limit that you don't use. You don't use enough of because then you have these other cards and you realize like how you're using that Capital One Spark card is not in your best interest. And also thinking like cards out there that report to personal and business. So understanding what you're getting from different cards where you want them to report only. And this is a good card for larger funding needs. You have the Divvy Business Credit Line. This is a fintech back revolve line of credit, no revenue needed for it, but there are some stipulations to that. I won't get into all that right here. The Brex corporate card, similarly, there is no credit check and fast approvals that are based on your bank balance. So this is an amazing way to go with these. And again, I can spend a lot of time going over each one of these cards and more of them out there that I recommend. But that's as much as I wanted to show you here in this video as we went over this. And I'm going to switch screens here to go over a little bit of the 0% interest side, and I'll show you one last thing and we'll get going. So here are some details for the creative credit-based financing, which I recommend, by the way. This is the way to go with it. And if you're a startup newly established or not even a startup and you're looking for something more low doc, where it's that whole EIN verification letter, the valid driver's license, the whole low doc copy voided check way with you talk about low doc stuff, the driver's license, EIN, and certification information, Secretary of State. So understanding that your business is there, it's an actual operating business, it's in good standing, the addresses check out. And that's something that a lot of people mess up on too, is making sure you have the addresses that match in all places accounts. Otherwise, you get errors with that, and approvals can be lesser, or you probably don't get approved at all. So, with this side, what I can help people on is get a combination of personal and or business credit mix. So personal term slash installment loans you can use for business with 5 or 7 year, 5 to 7 year, 1 to 5 year terms. Sometimes 1 to 5 year terms may come with collateral, other times it doesn't. So it's non-collateralized for the most part when it comes to these. And so if you're interested in those, I have more information right here. But a lot of the times it's a 3 to 5 week, 2 to 3 week or so program. And your credit needs to be higher though. When you're getting multiple 0% interest business credit cards, that's the way to go. And a combination with the personal term slash installment loan, you want to have 700 plus credit. And that's on all three consumer credit bureaus. Consumer credit, we're not talking business credit bureaus. And at times 680, but it's getting harder with a lot of credit card debt that's out there. So you're overutilized, you're over 30%. A lot of the times they won't even take a good look at you. Other times over 30% may be fine, 35%, 30, but 40%, nothing over 40%. But usually 30% max credit utilization is what you're going to see with a lot of this because there's not so much room for that error. You don't want to give somebody who has 40% utilization a high limit credit card. How are they going to get approved for a high limit credit card if they have 40%? And that's just one part of their account, a trade line, their revolving mix, and then you have their installment mix. So you have to look at these things, and that's why I analyze a lot of reports and why people don't get what they get because your past history, how have you managed debt? What have you borrowed? What's your highest and lowest limit? Of that highest and lowest limit, how much have you actually used? And what intervals and what periods? So if I know you haven't used it frequently or you use it seasonality cautiously for making these kinds of purchases, how am I ever going to give you 50,000 when you have only gone approved for a $10,000 limit card? You only have one card. There's not enough extensive history too. You need more trade lines too. How is somebody going to give you 100,000? It just doesn't make sense. Maybe 10 to 20,000 extra, or between 10 to 20,000 with a couple of cards. Maybe you get a total of 30,000, 20,000, etc. But you grow your account over time, and as you start using more cards, you start opening up more room. Excuse me, more room. And then if you needed other funding options to balance that, to give you more room to complete a project, etc., then that might be available. So 700 plus credit scores, 680 below, 680 minimum is like hard to do. Yeah, your utilization, we might have to use a short-term advance to pay that down, a bridge loan, something very quickly that you can do to pay that down. If you have revenue in the business, I can help you pay that down or for other ways and other means. There's cash out refinances out there. There are many options available, securities line of credit, security loans, but I don't want to reach too far right now. A lot of the times you want 6 to 8 years minimum credit history. You want 2 to 3 years, 3 to 4 years. You'll see that, and that factored in to the amount of revolving mix that you have, the amount of open lines that you have, what's closed, what's open. And if you don't have extensive or 2 to 3 years, even just a minimum, 6 to 8 years, even minimum credit history, what you should do is see who else you can be with as an authorized user account. And so if they're willing to do that with you, adopt somebody's credit history. But that's even getting a little bit harder to do too, because you want everything to be authentic in what you're borrowing, not what somebody else is helping you borrow. If that makes sense underneath their credit history. So a lot of the credit analysis and the systems, algorithms, all this stuff is getting very higher and understanding of like, okay, is this an authentic account? Is this by you? Is this by authorized user account? Who's the authorized user on the account? And just buying primary trade lines, secondary trade lines, and more trade accounts, business wise, and more is like that's becoming even more detected. So, what you want to do is slowly and surely build your credit and look for other ways of adopting growing your business. It doesn't have to be the way you always think. It doesn't always have to be as linear as you think. Sometimes the thing you need to do is behind the thing you couldn't see, or the thing you thought you should have done is actually not. That might be after what you actually should be doing. So it's not always linear what's going on. And that's what you have to look at right now in the economy too. So when many people are not happy, I won't get into politics or anything, but who you have in office and administration, think about you have people also who are business minded, entrepreneur minded, have grown businesses, understand business at a high level, and what's happened with past administration. Now, again, I won't get into that topic, so please let's not get into that. I don't really talk about all that in politics much to begin with. When I do, family wise, I oftentimes with others too, but I don't want to get into that discussion here. And just look at like whose mindset is there and what are they reviewing? Financials, like what are they saving? And then where can they put other things to spend? Things can temporarily go up and increase in price and inflation. But what is secondary to that? How did we have to get to here? We had to go through here first. So you see that there, 30% maximum credit utilization, at least one $5,000 credit limit, but 10,000 credit limit is best. If you have two 5,000 each, even better. That equates to 10,000. That way you just don't have too much concentration in one card. It's like when I look at a business, they have so much inventory or their Amazon FBA or any other business, restaurants, I can go on and on. But what kind of product? What's the pricing point? Do you have any pricing power over that product? Are you able to determine if the price goes up or down? Are you the right competitor? Are you the best competitor? You have product market fit, product pricing fit when I do a market analysis. So you're going to be the major competitor and domestically producing here, and you get to then go into different places. There's just so much to look at. And how do you do this with subscriptions? And what should you do on the back end? How should you offer more value, a bonus? and that should be your main high tier price point on your subscription. There's so much to do here. And so 3 inquiries max in the past 12 months. Usually I would say 2 to 3. But things change and they vary. And sometimes you may have that work, it won't. Sometimes 2 to 3 in the last 6 months, but a lot of the times 12 months because we want to see more history and everybody wants to see that more and see what's going on, the bigger picture. 2 new accounts max in the past 12 months, no bankruptcies, derogatories, or late payments. DTI below 40%. That's for term loans, personal term loans, and that. So debt to income really becomes a necessity when you are getting like a personal term slash installment loan. I would have said sometimes 35% and under, even bank term loans, FDIC bank term loans, 35% credit utilization, and that's on credit utilization. So 35% and under. If you're over that, it makes it really hard because a lot of the debt and a lot of complications. 50,000 a year for term loans only. So that's not for the credit cards. You don't need income verification by that. Personal tax returns are for like term loans and things like that. If you have business tax returns, and that's a combination with the two, then okay. DTI below 40% for term loans only a lot of the time. Sometimes you might see that number under 35, 30%. Sometimes every industry is different. And I might look at it different and I go, well, I've known on past patterns with people using funds for this. I know how they generate the revenue well enough or they don't. And then they come back and they need more. And so there's trouble looming already. So you have to be careful. And that's just a little bit of an overview. There's more on this I can go into on what would be needed. And I can share this with you more in time. If it's not down below in the description, don't worry, in time, and I can have something even much more customized, if so, to you. Now, what I want to switch screens over, go ahead and show you this again. And I'm going to show you one more thing and we'll get going. Again, I want to help you and make sure you understand. I'm sure you do. Uh, is everything is here. My link tree, it'll likely be the first link. So I'm going to give you different things. Don't get overwhelmed. I know there's quite a bit, but like I said earlier, the first 5 to 6 are great to start with. And check that number one out right here. And if I have something different of a layout than you're seeing now, the names, the words, the page you land on might be different as I'm moving things. That's fine. I'm always looking at doing things differently, improving things, making them better. And so I would check that out because I want to say that so many people are stuck in what they're doing. And whether it's a 9 to 5 and or business and businesses, a lot of people are just not happy and satisfied. And even when they are, there's just so much. When you think about the expenses, the overhead, cost of goods, oh, upkeep this, management this, one moving part here, fixed variable expenses. I lose a lot because of my fixed costs. That's where you lose a lot too, by the way. You might think variable might be variable if it increases over a period and it's a lot to balance. But fixed costs, especially if you have a lot of fixed costs, rent and a lot of other things that don't fluctuate, and things that have to be withdrawn every month, and you have high costs, even low costs can sneak up. I've seen that a lot myself. I'm no different. And you look at ways of trimming or things that you keep, but you don't need so much of, so you can let go of this, forego this for my opportunity cost of this, and what's my cost trade-off, and how can I get economies of scale by doing that and without doing that. So there's a lot to it. And so I've seen this a lot, and a lot of people get comfortable doing what they're doing because you have experience in it. Am I right or wrong? It's usually right. Meaning that, let's say you were a line cook, or I was a receptionist here for a staffing company. I was in IT. I was in fintech already. I was in software. I was doing this for lenders or whatever. You're doing financial logistics, which I was once in a 9 to 5 stuck uh, for financial logistics, doing a lot of data budgeting, underpaid by a lot, uh, undervalued, I would say. I thought the person in front of me would have retired. It didn't end up happening. There's a downturn, and I'm working for a huge contracting company servicing HP and others in the vicinity. 3-story building. We're at the bottom of a 3-story building in a dungeonous looking area. I kid you not. Just above me is a very bright yet dim light shining down on me like a UFO is hovering, and I'm in an interrogation room where a detective or a police officer would come in and go, "Hey, where were you on the night of?" Underneath me is a brown floor with cracks going in different directions, looking like it would open up, and I would fall right in like a black hole would suck me right down, and I would not be able to surface up and up quick enough, be able to claw my way up. And I knew that I had enough. And that's a long story short of this. And there's also my story here if you want to go see more of my story, how it all started, one of the buns there. Uh, I knew I needed to change. It wasn't just to go back to school and get more education. I went to school, got my degree. Chemical engineering was my thing. Chemical engineering, excuse me. And chemistry was my favorite class. And then I had to make a big decision. I wanted to get the business, so I went into business, got my degree through there. I've worked construction, manufacturing, and I mean like actual in the field production, aerospace company, construction, manhole sewer rehabilitation. Yeah, I've gone to different job sites. I've been in warehousing. I was once a ramp agent, courier role, administrative, dispatch. I did not like that, but I had to do it at some time just because I had to. And sometimes we have to do things right to do them. And man, thankfully and gratefully I did it, and also that I'm not in it anymore. Then I grew into that and I did more of their marketing, help them look at the financial side a little bit, look at their customer base, see how I can help them budget and do more financial logistics, doing a lot of data, budgeting, or inventory, management control, ordering, much as I could help and do more on that side. And then having to lift some boxes, helping out in different departments. And long story short of it, I'm in my cubicle sitting there and there's four corners and I get a text message or a message on my Snapchat social media app from an old friend I hadn't talked to in some time, Tyson. And I'm wondering why he's sending me a message. I open it. Oh, he responded to the teriyaki meal I had the night before. And then we got caught up, and then he starts speaking to me about different business, e-commerce, online business, and it something I already knew about, but then it just jogged my memory again. And I started thinking about it more. And then I couldn't get home fast enough in my beat up Honda Accord at the time, and this is many years ago. And I go through my door, so it felt like I burst through it with my Jansen backpack on my left shoulder hanging. And I set it in front of my stair steps. As I gingerly walked around the corner, you can hear like even little swishy feet. And I look in front of me, and there is my kitchen, my countertop where my laptop is sitting from the morning I was using it before I went into work that day. And I grab it. I don't even turn like 45 degrees over. And I just set my laptop in front of my dining table, just sitting right there. I open it up, and like a lot of us do, we begin to do research. And I started looking online, digital marketing agency, lead generation business, watch videos, started building that, a health business, a health affiliate marketing business. And I started doing other things in different industries, the e-business, finance industry in different ways now, as you see here, for many years. And so that's how you get into a lot of this. You start doing research and you look for ways of how can I get higher profit margins to lower risk of investment to something much more passive. I have much more freedom of my energy and time back. Digitally, I can learn something new. And if I would have stuck to what I've known, I probably wouldn't even have been here, or I would have, but it would have taken me time. And that position that I was in, financial logistics, went down under, and 50 plus people were leave, budget costs, and that was hard. So I had to go back on unemployment benefits and food stamp cards. It was one of, if not the hardest times in my life. And going out to pay with my EBT, going out to a family meal, I felt like a burden, even though my family wouldn't tell you. It felt like that to me. And here's older brother Michael. I have a younger brother. We're usually 6 or 7 years apart, feeling very bad. And so I knew I needed to change. And fortunately, before everything went down under, I started preparing because of that conversation. And when it happened, I wasn't everywhere where I needed to be yet, but I was growing. I was learning skill sets. I was learning something I wasn't comfortable with, but I knew I was growing. I had that vision and I have a platform and I'm growing into something more. So what you're doing now doesn't have to be what it is. It might not even be the first business that works. Like for me, I was doing a few other things and testing things and it wasn't it. So I went into this other thing. And so it's not always that thing. You have a platform, you have a message, you've been called to give people, to serve people, to preach to people, and to follow through with that and help people. And so you start to think about what you're doing now isn't always the thing you end up doing. It could be a hobby on the side while you do something else. And you just are given a platform to share a different message, whether it's with your words or not, whether it's with your breaking down things and in the blog written format, which a lot of it is better for me, but that's what you've been called to do. And so many people get comfortable with what they're doing now and don't go outside of that to grow. Oh, I don't know if I can learn the tools and the digital way of building a business and I have to do this free method, paid method. How does the paid method work? I can show you all that and it works. Flat out works if you're willing to work it and you're willing to put your effort and efforts. How much effort? Well, different businesses and system revenue models and what I'm doing too may require little minimum effort. If there's a system and a high converting system and products that are already chosen that work that are digital, products too, and with higher profit margins and more. There's physical, but you can see a lot of lower margin, or if it's a little bit of a higher margin, low ticket, you probably have to do off more volume. So it's not always more volume is the answer. So if you're doing that now, think about how you're doing volume and how volume is going for you. So that's how you learn. You get out of your comfort zone, you start doing something different, and that's where you grow a lot. And you begin to have more time to grow your mind. You're like, whoa, personal growth and development. I didn't think I'd ever have that. And at any age, older or younger. And that's something that I'm educating people on. And you think about the closest ones to you and what you want to leave behind. It's not just a business you want to leave behind, it's what impression and what appraisal you give, what you're getting in return, the status and level of increase in helping others out and giving back to your community, to other communities, and ascending to a higher level than you thought you ever could have. So that's all I want to leave you with. Oh, here's a framework that I didn't leave that I didn't get to, but this could be the online way of doing it. And there's different ones that I can get into with this, but you have people online, you send them to a page, collect a name and an email to follow up with email through email marketing, what you're going to learn to. It's not hard stuff, especially when you get done for you ways, done for you emails and other things that go on. And you have a 24/7 on autopilot, fully automated system, high converting system working for you around the clock while you're asleep too, promoting multiple offers. And that's the way to go. Whether your goal is 3,000, 5,000, 7, 10,000, 100 extra, 1,000 extra, whatever it is, what's the goal in mind? But what's the process that you're going to do to get you there? What's the realistic process you have to take? How many clicks? How many leads? How many this? And you'll see that when you're doing it, and you're like, quality, higher quality here. All I have to do is this much. Okay, I'm good. I was thinking about doing this other business, but I want to do this instead. And many people do. I've helped out people in construction, manufacturing, food industry, real estate investors, agents, insurance brokers, mortgage brokers, a lot. It's just some of a sample of what I've already done to help many people do something that I believe is even far better and superior to what a lot of people are already doing out there. So that again is what I want to leave you with. I can go on that topic on and on and on. But again, down below, my link tree and business form, you can also find that through here, as I've shown you. And if you're interested, again, starting your online digital business, when you don't have to have any inventory, you don't have to have any employees at all. You don't have to subcontract work. You don't have to buy purchase contracts, lease agreements, buildings, have all this CapEx, capital expenditures, unless you do, and that's what you want to do. And you're following somebody, so you want to be them from many years ago that they built. And like, is that really what you want to do? Is that now is the time to do all that? So sometimes looking at it from a different point of view and somebody else showing and telling you, I'm more of a show person, but showing and telling you that this is the way to go and what I believe to be the best business and the affiliate space and the affiliate marketing space is the way to go. And my businesses are running for me passively on autopilot. Do things on the finance side in different ways, directly and indirectly. I have a lot of different things and connections and what I can help you with. So I hope you got a lot of value. I know a long video, but I hope it was purposeful. I don't think a minute, 5 minute, 10-minute video would have done this justice. I want you to know that I do have your best interest at heart. It is people over profits. I don't do everything all off volume, and I am selective with who I bring into my world, my ecosystem, my culture. Not saying that you can't come in and ask me and have my help. That's not it. I'm saying that if you're that person, commit, and I will commit to you fully. But don't give me 25%, 50% right now thinking 50% I'm going to give him and then I'll see what he's about. No, if you've seen enough now, I think you've gotten enough to know, like, hey, give feedback, like when it's asked for, because it tells me about your character. Your character tells me a lot. Not that you have to be this sound like person as I have been and I've been building for years, and I'm not perfect. I'm building, 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 getting even better and stronger. My mind, body, soul, spiritually, physically, mentally, emotionally. And that's what's most captivating when you can do those things and you ascend to a higher level. You look at things different. And so I'm open. And again, all this information will be down below in the description. I hope you got a lot of value again from the how to get no doc business loans, whether it's up to 150, 250,000 business loans, lines of credit, and how really unrealistic it can be. It's hard to get and it just doesn't happen. So low doc, you're getting 0% interest. The personal term slash installment loan, maybe a little bit more, maybe a little bit low to medium. Then you have low with like cash flow, revenue back funding with 3 to 4 months or so bank statements, copy of your driver's license and avoided check. So that's still more or less low doc. You can go into low medium, getting to bank loans and these other ones. You start doing that with higher tier documentation. Other ones, fintech lenders like lines of credit, maybe they require 10,000 minimum monthly revenue, 6+ months in business, 600 plus credit, if not higher, 650 and above. But is that enough? And is that what you want to do? You can add one, then you can add one here with the lump sum. What do you need temporarily? What do you need longer term? I got you. So that's everything from me. If you got value out of this video, please give it a thumbs up. And if you enjoyed it too, feel free to share it with others. Yeah, family, friends, a stranger can use this. Anybody, help people as well through me, through you, and knowing at the end of the day, you have that conscious feeling when you can lay your head on your pillow at night and even in the morning as you wake up, know you're not stressed. Know you have somebody in your corner like that's wiping the sweat off your forehead. You're Rocky in the ring. You come back, give you some water, and wipe the sweat off your forehead. Hey, next time I want you to go in there this round and just put your guard up like this a little bit and just give them a few jabs and then lay off a little bit and then give them a right hook. Like, okay, just metaphorically speaking and all this, like I could have given you so many examples, but that's what I want to do and help you and do this in the most energy and time efficient way. The forum is the best way to do that. And I have a customized solution to respond back in an email that's customized to you, showing you your best funding option and options, a PDF that's long, something you can keep to long term. Sometimes I get busy where I don't always share that because I get busy. Sometimes I might make it truncated and shorter, and I might send you something smaller. But that's what I'm going to go through. And if you haven't subscribed, please go ahead and subscribe and click the bell notification icon so you do not miss any future content I'll be coming out with. That is all for today. Thank you.